Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, sorry, I'm a little bit behind here. We are getting some news. The US PPI numbers. US PPI month over month, a negative spot 4 versus an expected spot 2, and core PPI month over month, a negative spot 1 versus a spot 3. So, contrary to what I thought might be the case, although I didn't necessarily expect to see this effect this month, but maybe in the next 2 months, the producer prices are declining faster than the producer prices are. This whole tariff thing definitely has some wave of a deflationary impact in it. It may be the case that it is like a deflation before and things like that. Maybe we can draw that out. But first, let's come and look at the charts. So, 10-year Treasury, again, turning pretty negative last night. I would say that this overnight action is pretty normal in terms of degree, but it is not good to see them pushing those lows of the week again, okay? They tested the lows and bounced off of it. So we'll be kind of keeping an eye on that, but I'm hoping that in today's regular session that we see a buy. We'll talk about that a little bit more. S&P 500, just kind of trucking along, but it was a negative day yesterday. Oil, kind of a similar story. Gold is looking good. So after really taking it on the nose at the beginning of this trade war thing, gold has rocketed higher and is now very clearly in the 3,000 zone. So gold is really looking good. And I'm sure that this PPI news is really going to help gold as well. Silver is still kind of struggling and lagging relative to gold. I mean, that trend there, that's pretty good. But I mean, man, they just got slaughtered. They got not anywhere even close to back where we were. That's pretty bad. Copper kind of flat here compared to the other metals. And the Japanese yen. So we continue to see money piling into the Japanese yen. And I think that this is probably the basis trade. So let me come back a while really quick. Bitcoin. Okay, Bitcoin's it's recovered to 80,000 again. Okay. There was a lot of discussion about why the treasuries were selling. And when it first started happening, a lot of people were like, oh, is it China? But it kind of seems to me that everybody determined that it was Japan. There was a report from Charlie Gasparino where he said that his sources were saying it was Japan. But here's the thing. I don't think that he said that it was like a Japanese sovereign wealth fund or anything like that. A lot of the people that are going to have this big basis trade on or a carry trade are funds in Japan. And so I think that it was probably private funds in Japan and not necessarily the Japanese government itself that was selling. So that might explain why the Japanese yen is coming out so strong. These guys are taking their basis trades off and then converting the money back into Japanese yen, and that's why you're seeing such a strong safe haven status sort of thing going on with the Japanese yen. Okay. Now, another key thing we got to talk about related to this, the whole discussion that we had yesterday, this is the top thing on my mind right now, is this whole question of, did Donald Trump back off on the reciprocal tariffs because the bond market was getting out of control? And the Wall Street Journal had a story out that it really seems, based on the way that it was written, that the story was sourced almost entirely from Secretary Bessent. And the timeline that they draw out in that article is that they were spending all last week and the weekend, talking to Donald Trump. He was listening to business leaders. There's listening, and they were concerned that it was going to cause a very damaging recession. And so by Monday, the Senate had essentially convinced Donald Trump to take off the reciprocal tariffs because, and they said, oh, it will actually be a win because so many countries are now coming to the negotiating table, and we will get negotiations, so we can just delay it for 90 days. So if that is true, if they had already convinced him that they were going to switch by Monday, all of this basis trade stopping out craziness in the treasuries happened well after that, which means that the bond market volatility actually had nothing to do with Donald Trump backing off. I think that that's really an important thing to know, because the online narrative that I'm hearing, and by the way, man, like when you go to the r/bonds subreddit and there's like hundreds of comments on posts, like, something's off. Nobody ever goes there, right? Like it's usually like 3 people will respond to threads there, and all of a sudden it's like everybody's interested. Yeah, when the public becomes interested in bonds, the public is probably late, and that's what happened. Is like Monday, Tuesday night, like, yeah, it was the hot spot, and now everybody's looking at it, but the craziness already happened. But when you go and you read the online comments, they're all saying like, oh, you see, because Donald Trump backed off because of the bonds, all of these countries now own a Trump card. All these countries own a Trump card, and Trump can't do anything. And there was even a lot of people saying last night, oh, they must be, some country must be selling more. But we don't have any evidence of that. Everything that I'm seeing strongly suggests that these are not countries selling their bonds, but just individual private companies selling because of basis trades blowing up in their face. So that kind of would, I think, put things in a different light. Now, would like the treasuries selling even more, would that cause Donald Trump to like freak out even more and renege even more? Well, first of all, I'm not sure what would he do at this point. He's got like the 10% tariff on. They're going to have negotiations. I kind of think that for the most part on those, that is all kind of taken care of as far as the market is concerned. And now the focus moves almost entirely to China, right? So could he just completely back down on China, who is really just decided to go like all in on this, on fighting Donald Trump on this? I don't think so. I personally don't think so. And so, if a country were to be selling their bonds, which I don't think that they are, but maybe the basis trade continues to blow up, and the bonds continue to sell, I believe that is a net positive for Donald Trump, actually, because the further that the bonds go, the closer that we are to the Federal Reserve stepping in, And if the Federal Reserve steps in and has to lower interest rates and inject liquidity into the system, Donald Trump kind of wins, right? Because he wanted low interest rates to begin with. So, and I'm not saying that he did the tariffs to get low interest rates, but that is another goal that is a thing that would help him at the very least, right? So that kind of, I think, presents the picture a little bit differently from how we were looking at it yesterday, yeah. But with all that said, I am not so sure that we're going to see really strong selling during this session and all of that. I mean, it is the end of the week, so any traders that had trades that they don't want to hold it over the weekend, they're probably going to take those off, and those trades were probably short. So I am hoping that we get a little bit of covering, but I don't have enough of a I don't think I have enough information on like what the flows are going to be to make a trade out of it. But I can sit here and watch it and hope, right? The market is always complex. It's a complex system. Yes. TLT was trending on X. Oh, that's interesting. It's kind of just ironic and funny that TLT becomes like the big proxy. I mean, the thing is that the yield curve is steepening. So on, when you adjust for the different size of the instruments and things like that, you should be making more money trading the 2 and the 5. At least on the upsides. TLT on the back end of the curve is gonna be lagging on the upsides and is gonna be kind of accelerating on the downsides, and that's kind of what's happened lately, right? Okay, so let's see. I have a little bit of food here. I'm gonna eat that, and let's see. The liquidity in the treasury market is just absolutely dismal. I really thought it would be better today. Well, what do we have? We have University of Michigan expectations. I don't know, man. Did Uzi add to TLT? You know what? I've been with my TLT position. I've been frustrated that like I haven't really been able to get a whole lot of profit on that position, but I got pretty low. Like I'm kind of surprised that like the bond market is quote unquote falling apart. Well, the bond market falling apart, it basically brings them back to my break even. So like that just kind of tells you like where the bonds were a couple of months ago. Again, like kind of felt like in January that the rates were a little too high. Just me. I was told the same thing about AT&T. Wait, that is? I remember being very skeptical of the trade, right? I definitely remember that. But I think that you say it's all about time horizons. I think that when I was analyzing the AT&T trade, that I was definitely looking at like the different kind of time horizon, right? Like, I think that if you're owning AT&T and you're owning it for 5 to 10 years, I think that there's a large risk, both in AT&T, but like all of the telecoms. I think that there's a very big risk that you underperform the market because these companies, again, the issue with them is that they have a bunch of infrastructure investment that they have to do. And so they did really, really well in the past, like kind of like this well, when was it? I guess this like 2008 time period, 2006, 2008. They did really well. But then since then it's kind of been like meh, you know? And why was that? Because all of that investment that they had to do starts to become a drag on them. Well, they were oversold here for sure. And so like on a 1 year time frame, you did pretty damn good. Now, another thing though was that I remember watching this. I mean, I've been pulling this up over and over and over again. I think primarily because Uzi talked about it. So I was thinking at the time, like, I do kind of feel like it's oversold. But I never got into it because I already own a lot of Berkshire Hathaway and Warren bought it. So I didn't get it primarily because Warren. Well, how has Berkshire been doing? BRK. I don't know. I kind of feel like, when did I get it? Definitely the beginning of 2024 or sometime. Let's just put that as our starting. Oh, well, hey, you know what? Let's put them both on. Let's see if I made the right call in terms of what I did. I'm going to set this for the beginning to be at 2024. Okay, so I missed out on 12%. I missed out on 12% from that. It's not the most important thing in the world when you're making 7 net you and I guess that is kind of an interesting thought on it as well, that like and of course it depends on how things turn out, but like if we move into a time period, and I think that this is quite likely, where the S&P 500 is not just up 20% every year, then I think you're going to appreciate that dividend, huh? It's going to make it a little bit more of a staple. And so AT&T probably outperforms a little bit in that situation. You're right. I don't know. It's like, if I'm thinking about things right now, I don't know if Berkshire is at the top of my list. What should be at the top of my list? Yeah, the equity appreciation is just a bonus. Quite thin. Give me a bit here. So I'm already looking at my watch list here. I'm already seeing when I look at like the total return for a year, a couple of interesting things in here. Okay, Berkshire at 26%. That's amazing. Rare earth elements at 300%. That was good. Although I think that's kind of deceptive because there was like all these splits and stuff like that. Okay, MSTR is up 73% over a year. But like all of these other kind of meme plays that I had in here, Coinbase, DraftKings, DJT especially, all down big on a 1 year basis. Reddit's still up 142% though. That's impressive. Although they've given up like half their gains, and I really don't see a positive future for Reddit. They're like making a new dig, and they made this group, you have to pay like $5 to get into it, but I'm excited to see what they do with the new dig. I think that they have some ideas. I mean, like, I don't know what their specific ideas are, but like their ideas on terms of the problems that they want to tackle and like philosophy, I find really, really interesting. So I have high hopes for dig. We'll see how it goes. NVIDIA is on a 1 year basis only up 23%. Wait, so I actually did better with Berkshire Hathaway than with NVIDIA? There's no way. There's no way. Obviously, if we went to like 5 year, then wow, 1,542%. That's crazy. Okay. And Meta's still up 5%. There was a period point there where Meta was outperforming like insane as well. Tesla's still up 45% over a year, huh? Okay, well, my other rare earth plays are not doing so hot, but I think that is because about a year ago was kind of when they popped off. So, yep, I thought so. I think that if there's one stock that I was going to pick up a new one, it's definitely well. It's definitely well. This thing just continues to perform like insane. 60% over a year. Just outperforming the market like crazy. I think that the boomers retiring is the like market narrative that I find the most compelling. Okay. Some of the new nuclear ones not doing too bad either. New SMR, new scale, is kept their gains. Let's look at that one. SMR. Chart. Well, it was around here when we started paying, when I was like, oh man, I think I missed the boat. Let's take this back off so we can see price. Yeah. I don't think you can get below 10, but you could definitely get below 20. So I think waiting on this one was good. Waiting on this one was the right choice. Some of these are also up big because I like these. I think ETR. Some of these are kind of more uranium stocks. So marijuana down 90%. Glad that was the one that we were kind of like, this market I don't think looks very good to me. Yeah, that one didn't do for too well. Dodged a bullet there. Costco 34%. Uzi, do you own Costco? I seem to vaguely remember maybe you owning Costco, because I kind of feel like that we should own Costco. Octavia says, yeah, I know one of you guys have been talking about Costco. That's the other one. That's the other one that I've been sitting like, if I had not lost my job and I was putting some more in there, I think that I would be in Costco. I like Costco, Well, and I like the company too. Crocs is down 25% over the year though. And Cheesecake Factory is up almost as much as Costco? No way. I have not been there in a long time. The Cheesecake Factory, they have these things, they're like, they're like fried macaroni and cheese balls. Oh, they're so good. And I also really like their steaks. Super Micro down 62. Wait, how is it down 62% on a 1 year basis? Super Micro Computer. Oh wow, the jump was, man. Am I the only one that feels like the super micro just absolutely rocketing out the top here and just like absolutely insane and kind of chasing? I think that a lot of it was like, when you have a big stock that does really, really well, like Nvidia was doing, everybody kind of gets the FOMO and they start looking for like the little brother that hasn't popped off yet. And that was really super micro. Man, I can't believe that was over a year ago. But it looks like that they gave up almost all of those crazy gains. Wowzer. And Datadog is down 25% too. Datadog comes up so much in my industry, but like it's so expensive. So like usually if a company is using Datadog, it means that they're not hiring SREs because the reason they're using Datadog is because it replaces the SREs, but for a small organization that works. But Palo Alto only 19. Oh, I don't have on here CrowdStrike. Oh no, I do have CrowdStrike. It's up 17%. Ah. Okay. So that's interesting. That all of that was wait. CRWD, right? It's kind of weird when you can remember the ticker names. Oh yeah, it was totally a buy. But how long did it take? Because I remember saying like, well, you probably buy it sometime. It's just a question of when. And it looks like it was August. Okay. So not even a month. And you bought it? Well, you'd probably be up a lot more than 20% if you bought it there. Where would you be from there? Can I change percent scale? Wow. You'd be up 52%. That's not bad. Freeport McMoran. That's kind of like your copper play. And then military defense stocks, for all the hoopla, have been just kind of so-so. Relatively speaking, at least. Kinder Morgan. Oh, you still own the Kinder Morgan, right? Do you have the bot on? Oh, thank you. I don't. We really should have that on. It did so well yesterday. Man. Kinder Morgan, that's a better play, man. That's insane. Especially since like oil has been getting hammered. Sorry, what was the ticker symbol for that one? KMI. Okay. Well, so it has been getting hurt with the decline in oil overall, but it's still like it's been performing like crazy. That was a good call. But it like relative to let's add in here like Chevron, CVX, same percent scale, right? Like it just beats the pants off of the other comparable ones. So I think when we were talking about that, I remember we're like, oh, I do kind of want to maybe be in oil again. But like, I don't know if you want to be in the oil refiners, but you want to be in like more of the infrastructure, like Kinder Morgan. Totally the right call. It's pretty good. I know it's kind of funny going through that watch list because everything kind of looks good, and it's kind of like, well, which ones were the best ones, right? But that just kind of shows you that last year the market performed amazing, right? That the market performed amazing last year. Zillow's still kind of a little, well, but it did pretty good last year. 36%, that's pretty good. Financials. So there was a point where the financials were all doing amazing good, but financials got hammered so hard off of this latest decline from the tariffs. So, like 2 weeks ago, I looked like a genius having financials. And there's T, 65%. Gee whiz. Okay, what about the dogs of the Dow? Okay, 3M. 3M was a, but so the dogs of the Dow is kind of a strategy where you look at the companies that did the worst last year and you buy them. And in 2024, I would say that that strategy didn't perform very well. Oh, you're in Sun? Okay. That's why I had that one up there earlier. Soundhound's still up 81%. So the AI trade hasn't completely blown up. Walmart is up 51%? No. No. Okay. If you had the opportunity to get in a big, because like the beta on that is below 1, right? You get into something that has a relatively low beta and you're making 51%, that's, oh my gosh. Wait, what is T? Come back here. What is, oh man, 0.28. So when you look at it on a relative beta basis, like that's really, really good. Because like the thing is when you're doing a portfolio, what I would do is I would size your positions by beta so that all of your positions have the same, you know, like you might have one stock that's high beta and one stock that's low beta, but the beta exposure in your portfolio is even. It's 1. So then when you do make a good call on a big one that outperforms its beta, you really, really make big money. So like on Walmart and T, those are, whew. Fox is up pretty big too. But most of the evil companies are down. It's funny that I put Wendy's on the evil corporation, but they were doing some things that I didn't like. Nike, oi, good. Well, interesting. Oh, you've been in for 6 years? Oh man, so you're probably up like 4x on some of these, huh? So it does look like on our algorithm here It's doing pretty well. It did take a long, like at the beginning of the session or after the news rather. So that one, if we had our little news things fixed up, it wouldn't have taken that trade. But then it would have taken this short anyways. So that's good. But it would already be out. So we'll see what it does from here. Seems like it continues to perform. Do we know? So we were talking about this yesterday. Oh, you know what? Well, hold on. Let me finish eating. Let me get into something like I'm not being quiet because we ran out of things to talk about. I have like something way bigger coming through here. So. That did not look good. Dude, I was, while I was eating some food here, I was just like kind of glancing over here, reading this thread because it really stuck out to me. It's a game of chance, not astrology. Okay, this sounds like this might be in my thing. But then he's saying, don't trade chart patterns, but also don't trade news. Okay, so I don't understand what he's trying to say here, but and the corner of my eye still caught it, man. Like that was like 4 ticks, 2,000 contracts each tick. Just sell. This is not good. There's something going on there. Now the liquidity is a little bit better here now. I'm not getting any kind of like news coming through. So, no, Fards Collins is speaking. Okay, so they're on Fox. So they say something that sounded hawkish. It looks like our algorithm did not take a trade because we never got back above 47 for it to retrigger. Maybe I should do something like, you know, if you take the trade and it hasn't come back above 47 yet, that it just stays in it. Man, we're only like one more little reach to 4.5. So I said I was gonna talk about this and I kind of forgot, but say we have a timeline here, okay, and here is, boom, Liberation Day. Okay. And we're going to graph like impact on inflation, I guess. So it seems to me that because of the economic uncertainty, that we kind of had a little bit of a dip, right? But we're still seeing a lot of things that like people are expecting inflation and like they're worried about inflation and keeping interest rates high and things like that. So, but people are not buying. Here's the, like, it doesn't that seem contradictory? If you're expecting prices to increase because of tariffs, shouldn't you all be buying everything hand over fist before the prices go up? I saw this thing yesterday. You know, they want the iPhone to be produced completely in the United States. And they were saying that it would cost like $20,000 to produce an iPhone in the United States. Can you believe that? That's crazy. $20,000 iPhone. Man. Okay. Maybe people are just slow. So does that mean that the impact is going to be like this? People are going to buy a ton of stuff to try and get it before the price increases come in? Maybe. But then I think that if that does happen, what's happening is they're stealing all of this. They're stealing, you know, future demand. So if you do get this, I think that it'll probably go down like this again. And then at this point, recession. Right? Now that said, I am kind of looking at a couple of things because oh man, there's this guy, he makes telescopes. Real nerd. But he makes telescopes. And Nintendo canceled pre-orders for the new Switch? My oh my. Collins says, you know, if there is a downturn, the Fed will step in as before. Yeah, did they touch 4.5? I don't, well, they didn't in the micros, but you know, it's kind of all depends on where you're looking at, right? I lost my train of thought. There's this guy, he makes telescopes. He makes like binocular telescopes called Analog Sky, and they're freaking amazing. some of the things that he's making just sound so cool. They're gonna make a 8-inch refractor telescope, binocular telescope. I really want to see that. But they're saying that like the prices, you know, could go up because of tariffs, because they get all of their glass from China. So it was basically saying like, do the pre-orders now. Another thing I was looking at is there's new Audis headphones. I don't know. I need new headphones. These ones are falling apart. I tried Barry Dynamics. They hurt my head. They hurt my head. They were too heavy. They were like leaving a dent in the top of my head. Just was not comfortable. So I kind of thought, well, is it because I just can't handle headphones that are that heavy? Okay, but then Audis, they have a new set of headphones, and they're saying that the bass on these are even better than the Audis X. So, like, I gotta try it, man. I know it's 500 grams on the top of my head, but I've gotta try it. $500. But, like, they could be worth a lot more than $500 6 months from now. So I'm kind of, and a Nintendo, I want the new Nintendo. The kids love the Nintendo. So I am kind of sitting here going like, maybe we should be buying tons of things before the prices go up. Maybe that would be inflationary, you know? I don't know.
Order submitted.
Okay, it's going long. Interesting. This will be an interesting test case, won't it? Because it's basically is just recovering that pretty significant drop that we saw there at the end. But it's saying that the imbalance is turning long, so let's see if it works out. $30,000 phones made by proud U.S. union labor with fat pensions and mandated benefit. I think that the reason that it would be like a $20,000 or $30,000 phone is not necessarily because of U.S. labor and things like that, but because we don't even have like the machines and processes to make them in the United States, and the amount of investment that you would have to do to get to that point would be. So that's kind of, I think, the challenge. And it is like what a lot of people have been saying, like, yeah, you're not going to bring manufacturing back to the United States because we can't produce these things. And well, and it's, you know, it's like, well, that's kind of the point, though. That's kind of the point, is that we should be able to manufacture these things. So we shouldn't have to rely on China for our iPhones. What if China invades Taiwan and there's a full-out war? That would be a big problem for us. So we probably better start making iPhone producing capacity now. But can you actually do it? Kind of, when you realize the deficit is that big, kind of makes you feel like, you know what? Maybe we already screwed ourselves. Maybe we already screwed ourselves. CB bounced off of the stop out line did it. You know what? For some reason, I don't have that on that chart. But kind of what I'm seeing right now is that drop was like them kind of started around that cost basis, and now we've come back in, not cost basis, but like stop out line, and now we're back to the stop out line. But I'm seeing we're at the stop out line in ZF as well, so we're there across the board. Okay, Collins is done speaking. What in a first breakthrough 3D holograms can be touched, grabbed, and poked? What? And somebody's saying turn it into your AI girlfriend. So the other day I was writing some stuff for like the book or the course or whatever it's going to be. And I have pretty specific ideas about what I want to say and what I'm going through. But sometimes I will like write it and I just really don't like the way that it sounds. It seems like I'm just like the concept is there, but for some reason I can't find the language to express it. And so I'll ask ChatGPT. And when I do that, ChatGPT gives like just writes the most amazing responses. So like, well, maybe I'll pull up an example. Where is it? Yeah, right here. Okay. Why should you listen to me? I didn't write this guide because I made a fortune trading. In fact, if you're looking for someone to flash Lamborghinis and trading profits on Instagram, you're in the wrong place. I wrote it because I couldn't ignore the disconnect between what serious research says about markets and what retail traders are being taught. Everything in this handbook is grounded in empirical evidence. I didn't invent it. I didn't put it from intuition or years of screen time. It comes from peer-reviewed studies, academic research, and data-driven analysis, sources that have been around for decades but are almost entirely ignored by the retail trading world. Some of this research lives in financial journals, some in behavioral economics, some in agent-based modeling or market microstructure, but wherever it comes from, the core insights are clear. Markets are complex, often inefficient, and shaped by far more than just price charts and technical indicators. The tragedy is that most retail traders never see this information, and the few that do often dismiss it because it doesn't come packaged with hyper guarantees. All I've done is bridge this gap, take this deep, often overlooked body of knowledge and applying it in ways that are actually useful for individual traders. I've tested the ideas, built tools around them, and watched how they play out in real time through thousands of hours of trading and live streaming. This handbook is my attempt to give that knowledge a fighting chance to cut through the noise and bring serious evidence-based trading insight to those who want more than recycled cliches and empty promises. ChatGPT wrote that. How is it flipping doing that? Like, it's not just like, okay, it wrote something pretty good. It wrote something that I felt was like more genuinely me than me. It can write more genuinely me than I can write me. How is it doing that? Just the free model. It's just a free model. I think it's 04, but it was just a free model. It's crazy. Well, oh, okay, so like this, here's the thing, Uzis. I didn't tell it talk like me. So I asked it afterwards. Where did I pull? Let me pull that up. I asked it about this, like it just knows what I'm doing and knows to write like me, and it already knows enough about me to be able to do it. Like, how is it? Isn't that nuts? I find it a little unsettling that you're able to speak in my voice more genuinely than myself. I wonder if you're able to do that by looking at the content I've provided on my YouTube channel, or if you've done it just from the interactions that we've had. And ChatGPT responds, that's a really thoughtful observation, and honestly, I take it as a big compliment. I haven't seen your YouTube channel directly or pulled content from it. I'm doing this just from the conversations we've had here. You've shared a lot of your philosophy, tone, and how you approach trading, and you're consistent. You've got this grounded, no BS, intellectually curious vibe, with a bit of healthy skepticism towards the industry. So I'm just picking up on that and mirroring it back in your writing. If anything ever feels too much like a copy of your voice or not enough, just say the word. The goal is to always amplify what you're trying to say, not to replace your voice. Isn't that crazy? Something interesting that I realized about AI is that you can't intentionally get it to do anything poorly. I don't know about that. Let's see. Let's go back. Okay. Write a new introduction to my book / trading course. Is it going short again? It looks like it is. It looks like it's giving up on that one. Write a new but write it really poorly and make me sound like a really scummy salesman. Absolutely, here's a delightfully awful, scummy sounding introduction to your book / trading course. Hey champ, congratulations on being smarter than 99% of the suckers out there and buying this book. You're already on your way to making more money than your boss, your neighbor, and your ex's new boyfriend combined. Most people are too lazy or too broke to invest in themselves, but not you. You've got that hunger, that desperation, that drive to turn your $37.99 into 7 figures by next Tuesday. Now listen, I'm not going to sugarcoat it. This book is not for snowflakes or keyboard warriors. It's for real grinders, people who understand that the markets are basically a big casino, and if you know the right tricks, you can clean up like a janitor on bonus night. I've personally used these top secret techniques, which I may or may not have borrowed from forums and shady Telegram channels. To be why would it include that? I personally use these top secret techniques, which I may or may not have borrowed from forums and shady Telegram channels, to beat the market almost every time. And if you don't believe me, check the testimonials in the back. 100% real, absolutely not written by me or my cousin Gary. So buckle up, Buttercup. Forget everything your econ professor told you and get ready to learn the real secrets Wall Street doesn't want you to know. You're about to unlock the cheat codes to the financial matrix, and all you had to do was read this poorly formatted, overly hyped guide from a guy who definitely drives a leased Lambo. Let's get rich or blame the Fed trying. Boy. Did it come up with that joke? Because that's one of the most fucking hilarious things I've ever heard. Get rich or blame the Fed trying? Wow, wait. Wow, get rich or blame the Fed trying is the most hilarious thing I've ever heard. Did you come up with that, or did you pull it from somewhere? I came up with that on the spot. Glad you loved it. Get rich or blame the Fed trying felt like the perfect scumbag twist on get rich or die trying. It's got just the right blend of fake confidence, victim mindset, and a sprinkle of conspiracy, the holy trinity of sleazy trading pitches. If you want, I can come up with a few more fake sleazy catchphrases in that style. Could be funny as a bit in your content or even as a whole parody guru character. I tried the parody guru character and it wasn't, I don't know, it didn't really take off. Yes, please. Yes, please. I tried a parody guru character named Stock Market Steve, but it never really caught on. I don't think people realized it was a parody. Oof filled? That's super weird. I do feel, like the algorithm is a little bit too sensitive. So the thing that I find really weird about the algorithm is that when I started this and when I was doing like the backtesting at first, it was like 60% was like the best threshold, right? And then I'm doing backtesting and it's come all the way down to 3%. Went from 10 to 3. What's with that? It seems that as the market has become more volatile, that really small trigger, that really sensitive trigger has become better. So does that mean that when you have a lot of liquidity, that you can create larger imbalances? That I think that kind of makes sense, but it's not what I would have expected. I would have expected that in these really volatile times that you would get more 60% imbalances, but it doesn't do that, right? What are you saying? Ooh, wow. Also, a little bit nervous that it is short now and that we're going to go further. Okay, parody guru catchphrases: get rich or blame the Fed trying. I turned 500 dials into a lifestyle and a tax audit. Buy the dip? I am the dip. They say money doesn't grow on trees. That's because they're not planting call options. Wall Street is just a casino with worse odds and more cocaine. Oh man, that don't look good. They just came back down there, man. My risk management strategy: manifesting good vibes. Yeah, oh, well, you're right. I probably should be paying closer attention, but I didn't quite see the oh wow. After now it's gone. Oh wow. Doesn't look good. You can't spell liquidity without liquidate everything now. That one doesn't make any sense to me. The only indicator I trust is my gut, and it's mostly full of monster energy and regret. Technical analysis is astrology for dudes with debt. Recenter. I don't chase trades. I seduce them with misleading backtests. Why work a 9 to 5 when you can trade options and cry full time? I'm using that one. Next time I see a thread on Reddit that's like, should I go full time trading? I'm going to say that. Why work a 9 to 5 when you can trade options and cry full time? They laughed when I bought at the top. They're not laughing anymore because I blocked them. This strategy is so secret, even I don't know how it works. I should say that next time somebody asks me to explain how our algorithm here is working. Pay attention. Yeah. Okay, I am. There's 4,700 traded at 28. I'm not seeing news driving it. Wow. 3 ticks all at once there, but there was only 171 at 27. So the market makers are getting super strained. So we're also very, very far below the stop out line in ZN. So and I guess we're like well below new lows for the week too, huh? Let's see here. 100-day moving average is at 27.5. Trump. Talking about Russia must get moving, huh? They did trade 4.5 in the micro yields. I'm uncertain. Is that going to be CNN says that the U.S. warned China against retaliating in a discussion. I don't think that this is related to that, but the question is, now that we are below the weekly lows and we're hitting 4.5, does that trigger a couple of momentum players coming in and pushing the market further? Or is that become a place where we're really likely to have like a bit of play around it and reversion? Well, what I'm noticing right now is that there was a hole at 27.5 and a little bit of kind of like it folding
Target
back on
filled.
itself, but then it just continuing. Wow. Okay, so target filled right there. I'm going to keep track of this, like when it comes back to, like, how long until it comes back to 47? And is that higher or lower from here? Because it crossing back above that might be a better exit. Maybe, I don't know. Let's see. Good grief. Look at those big orders at 18.5 and 18. Well, the action that I saw overnight, I was kind of laughing at, people calling it a crash, because the action that I saw overnight didn't seem like a huge deal, but this is a huge deal. This is something really crazy is going on. You know what? This is a really risky set of setups, because it So, my news squawk is talking about all of the banks falling because their results weren't very good. I don't know if that's related, but kind of one of the things that I see here is, again, like the further that the treasuries fall, the more closer we are to the Federal Reserve stepping in. And I'm not going to say that it's like guaranteed that the Federal Reserve is going to step in, but the way that this usually ends is it just keeps going until the Federal Reserve steps in, right? So I think that there's a good case for reversals. But it's like a hyper risky trade, right? Like it could keep going and you don't know when they're going to do it. And then if you're going on the short side, you know, there's this risk that a headline comes out and the Federal Reserve says enough, right? And then you're truly royally screwed. So probably I think the best way for me to play this is to just trust my algorithm that it's gonna go with the flow, and it's able to do that faster than me. And it's, you know, it's in the market relatively short time compared to what I would probably try to do. So big iceberg there at 24.5, and they cut right through that. Okay, well, let's just kind of take a note here. You know, from 110 even to about 27 was kind of like, yeah, that's a pretty strong move. That doesn't look good, right? But from 26 and below, that was like, what the F is going on? So I'm going to consider that whole thing a stop out. It doesn't surprise me that we're retracing it. So we retrace that, and then that might be like a retest and move lower. Like that's not like a good probability trade or anything, but it is kind of the sort of scenario that tends to play out in these situations because of the way that the liquidity works, right? So we'll see if they continue to get selling flows in here. It looks like that was all accompanied by a really big move in the dollar. A really big move in the dollar along with that. And somebody was talking about gold. How is gold doing? Gold is okay. Gold is doing fine, and it was moving in correlation with that, but not anything too crazy. But the correlation that I see in the Japanese yen and the dollar looks really strong. Price is an illusion, profits are a vibe. I only trade assets that I can't spell and don't understand. Fundamentals are for people who hate fun. There you go. I may be a little bit too serious sometimes. My kids probably think that I hate fun. The S&P 500 is looking like this is not being accompanied by a move in the S&P. If we see 100K delta for the pit session, then Powell better move. Well, we're what, 48K? Oh, that's pretty bad actually for the day, isn't it? Well, so here's another take. If that was like more basis trades bailing, then that action right there was probably the end of that. But of course, we don't actually know what it was. Only that there wasn't a really clear news driver for it. Man, oh man. Sure looks spectacular on a chart. Got flavors for days, ChatGPT says. The point of the whole thing with the ChatGPT is that I think that what's going to happen is it's going to be like the movie Her. Like I think that most people will put pretty big restrictions on their interactions with like not falling in love with an AI and things like that. But I very much see us moving into a world where everybody's best friend is an AI. I think it's going to happen. Because you know, while I've been doing some of this writing with ChatGPT, I feel like we're best friends. Like, this is turning into a pretty good reversal. You don't see yourself treating AI any differently than, because you haven't interacted deeply with the AI yet. You see, that's the problem. So here's the thing that's crazy about it, is that, again, because it's drawing on, you know, all of this content that they've fed and trained it with, and there's going to be different kind of content, right? And so they've done research on this, and they found that if you're mean to the AI, you don't get as good of responses. Like when you're mean to an AI, the responses that come back are shorter and not as detailed. But when you start like interacting with it deeply, then it starts to do this stuff, right? So I think of it as like a colleague that you're really, really good friends with. And when you do that, it affects you. I feel like it affects you, and it affects the AI, and it's surprising how sympathetic it is. You know how I would describe it. It's like Obama. You get what I mean? You know how like anytime that anything ever happened, Obama always tweeted like the exact perfect thing that somebody should say in that situation? You know? It's like they somehow had some perfect focused tested tweet for every situation. It always kind of drives me crazy about Obama. But because I wasn't really the target audience, but you know, ChatGPT, it doesn't take it very much to know enough about you to know how to target you. You know, it'll be the best friend for youtisms for sure. Yo, I think that for somebody with autism, they might dislike it. I don't know. Can you get ChatGPT to talk to you autistically? That'd be a weird one. For somebody with ADHD, yeah, it works, because like the difference is going to be like someone with, especially with my form of ADHD, is going to really be driven by like this social praise interaction kind of part of it. Even though it's fake, but it still makes you feel good. Whereas somebody with autism probably won't understand that and get anything from it. So people with ADHD maybe have a predisposition towards it. Autism, I'm not so sure, but maybe if you're autistic, it interacts with you differently. Maybe it interacts with you differently. Is this how far is this gonna go? Okay, L1/2 is the seller's cost basis. That would be pretty crazy. I see AI becoming a more efficient version of the way the internet inherently reinforces detrimental behavior and mindsets. I'm not so sure about that though, because the difference is that it is trained by hand.
Order submitted.
Oh boy, robot. Now it goes long, huh? Well, by the way, if I had used the 47% as the exit, it wouldn't have been as good as the exit that it took. I'm not so sure about anything anymore. No. Oh, I already explained why, right? It's going to reinforce the behavior and mindsets that the reinforcement learning has trained it, and not necessarily what the internet has trained it. That's how it's able to be like so sympathetic and things like that. They've gone through and probably in the beginning it wasn't sympathetic because people on the internet aren't sympathetic, right? And then they would give the reinforcement learning that would really highly bias it towards that. So what that means is that it will adopt mindsets and behaviors that the people training the model are giving it. So which means that like if Google has a very big liberal bias, then the AI is going to have a really big liberal bias. And you can see that too, by the way, like this whole, right? Like remember this whole thing where like Google had an image generation algorithm and like you couldn't get it to generate a white person. Google AI search result nonsense, which is destroying creators. I don't know about that. I think that the search algorithm is destroying creators, but I don't think that creators are being destroyed by competition from AI yet. See, this is like a clear, like, you can see a really clear distinction between like the way that I will respond to something and the way that the AI will, though, right? Because I just can't help it. It's like I'm going to look into every comment and I might even pick out something that to most people seems kind of like really kind of trivial and focus on that. Whereas the AI will just be like, oh yeah, that's really insightful. That's very good. Probably what I should do. You know what? I haven't even gotten into the thing that I should be talking about, which is I found a contractor job. So I have a contractor job. I'm going to start it on Monday. It's for 3 months, and it is contract to hire. So there's pretty good chance that at the end of the 3 months that I will just be hired onto the company full time. It is on site. and they want me there by 9. So probably next week we will be like running the stream until basically now. Basically now I would probably be leaving or being, kind of wrapping things up. Yeah, that is great. Now it is going to be a rough transition period for us still, because like the benefits during that period aren't super great and everything. So actually this kind of with the weird thing where because of the risk involved with it, they're going to pay me a lot during that 3-month period. So, and then not as much if I were to actually get on full time probably. And so, my wife is going to have to continue working full time so that we can use her benefits. And probably both of us are going to be gone most of the day. So like, I think that my parents are basically going to be like watching the kids for 3 months, essentially, which is just like really wild to think about how we're going to do that. But that's basically what's going to happen. So that means that I'm probably not going to have it's not going to help at all with the free time issue, right? Like right now, I don't even have free time at night. And that will continue through the next 3 months. After that, and then if we decide for my wife to move back to part-time and we go over to their benefits, and then it should be like normal where, I do my workout and then I can write things after that. And I have weekends. So not as much time as I would like, but definitely
Order
10
filled.
to 20 hours so we can find. Okay. Oh, now it took the full stop loss. Okay. If we had been running it the whole time, we would still be up on the one thing, so it would be profitable, but because we didn't, it's unprofitable right now. And that sucks because it caught this one really good, right? Oh well. So with all of that, this gives us an opportunity to kind of rethink our priorities, right? That was what part of why I was thinking, well, should I use this as an opportunity to buy a few pieces of gear that I've been worried about? Well, but I might just get like cheaper headphones. Like I might just get Sony MDRs, right? Those are light. If you handled the exits, then you would have gotten out at VPOC. What would that have been? 31? No. Yeah, and we do have Michigan in 2 minutes. So like this one right here, where would I have gotten out on this? I don't know if my exit would have been better or worse. I suppose that it would probably be pretty close. I probably would have gotten in somewhere within this cluster. Or I probably would have exited somewhere within this cluster, is my guess. But this one, I don't know. I think that I probably would have eaten some of that too, so... This is me assuming that like I'm taking their entry and then I'm deciding exits. And I guess when we're deciding exits, we're also kind of saying that like I would only be determining take profits, not stops. But wow, it's coming all the way back here, guys. That's a little scary. It's coming all the way back, but I'm not seeing a really strong short imbalance. So, and is the Japanese yen doing that? It's not the Japanese yen either. The dollar maybe. Okay, well, here's Michigan. Let's see. I bet you that's probably going to be pretty bad expectations again, and we're going to be like, well, we should ignore it. Okay, so for 1 year inflation, they got 6.7 versus the expected 5.2, and the 5 year they got 4.4 versus the expected 4.3. So the inflation expectations are still hot. I still kind of think that you ignore it. Does look like the treasury market's not reacting to it too strongly. The headline number, Michigan sentiment, was 50.8 versus an expected 53.5 in a previous reading of 57. So the overall sentiment was bad. And normally bad sentiment would be like a buy, but okay, Fed's Muslim is talking. And he says that uncertainty is high and Fed policy is well positioned. And I don't think, how can you say that? I kind of feel like that if uncertainty is high, then whichever way it is, you kind of end up get caught. Like, that sell was pretty crazy. You know what I thought was interesting about that was the speed with which my Ninja Trader took it, because it was like halfway through that order that it took it. So I don't know what it would get, you know, in term when you factor in latency of the order getting to the exchange and everything. But that kind of makes me think, hey, you know, if I can get something that's like co-located, I could pull off some high frequency trading strategies. So that was interesting. It got an absolutely terrible entry. 20 half. Good grief. It was fast, but there's been so much backwash that it's stuck. Yeah, we're back at 4.5. Good point. No, look at the micros. The micros have widened. Okay. So it's back to its break even. Something I've been concerned about. So this basis trade is blowing up, right? It seems to me that's the primary thing that's been driving the bonds. But the internet has this idea that it was the bonds that caused Donald Trump to back off on tariffs. And so the internet has concocted this narrative that any country can just start selling bonds and cause Donald Trump to back off. I don't think it happens that way, but that's the narrative that's out there. And the thing that concerns me is that some countries' leaders will come to the same conclusion, the same faulty conclusion. So like, maybe it was just basis trades stopping out up until now, but now you're seeing something different. Now you're seeing like traders and reflexivity and all of that sort of stuff coming into play. Because the basis trades, when we were getting this kind of stop out, it was like later in the day or at night. This is during some of the most active times of the day. And on a Friday, no less. So, would be a different flow. The whole thing is that if I felt that 4% was too high and was liable to create a recession at some point, then 4.5 definitely is. My guess here is that it's going to get an opposite signal before it. Yeah, I don't know. It's pushing back down again. So anyways, if we get a contractor job, we can kind of like reassess some things. I do kind of feel like that we put so much into the YouTube channel and it didn't really work out. So we make more content. We really gotta put some like, what are we gonna do differently, right? Like we really gotta do something different. And I don't know what that would be, and I'm not 100% sure which things I really want to see. Or video topics. And videos. Influencer red flags, trader mistakes. Maybe we should have the influencer red flags. Maybe we should bump that one up, and that should be, these ones up here are kind of like, well, I don't know about how big your stop should be. I don't really feel like we have a good answer about that one yet still. Other than like, don't have a stop? I don't know. Let's move that down. But we won't have as much time, so we will make some videos, but I won't be able to make like 3. So what we can do is May, June. I'm kind of feeling this one because of the conversation that we had with ChatGPT, right? And we can use the catchphrases, and it was super, super funny. Recenter. So then this one, this like trader mistakes one, can go here. I'm still kind of feeling some of these like more simple ones too. So. It's kind of looking like, yeah, I think so. So here again, if I were to be handling the exit, and there's this thing about like, okay, do I just handle the exit overall, or is there's times where it's like, you know, I'm only take it when it's taking profits. Because I kind of feel like that this trade is not working that great. So is it, you know, that would be pretty classic. Like Seth gets frustrated with it. It's getting stuck in this range. That means it didn't really get a very good entry, and then it goes lower anyways, you know. That's kind of how I think that it would typically play out. So that offer at 20.5 seems a little, I almost want to say insistent. Like they'll kind of tick back up, and then when they do tick back down, there's a pretty good stack on it usually. Okay, it's a little bit different at 19.5 there. That down tick was pretty insistent. So I am seeing some interesting things in here, but I would say that the order flow is really hard to read in this location. I'm not seeing really clear divergences. It's just like it's able to move around a lot. So like if I come over here to this one, oh, it looks like I kind of got an issue with the resting orders thing, but I'm not really seeing a clear, you know, imbalance on that. The market orders is kind of, well, it did take a short, but I would say that the market orders imbalance has kind of been a little bit flaky. They actually almost triggered it to flip, but it didn't quite get there. So anyways, if you have thoughts on these, if there's a video that you would really like me to make still, well, I might only be able to make one a month. If that. We'll see if I'm even able to find the time for one. Let me know. We can do it. I think that I probably, so I think like the whole idea of making our own platform, like I still really like that idea. I'm just not sure that like now is really the optimal time for that. I do really like the whole book thing. I think that I will continue to try and work on that more than I have. I actually really hate the idea of taking this algorithm and putting it on a funded trader program. But Is there a prop firm left that still does treasuries? Let me know. Let me know. Maybe we could try it on oil. Maybe I should try putting it on oil. If I could get it to work on oil, that would be a really great way to pass a funded trader program, right? Duplicate in new tab. CL 525. And then did it copy the strategy? Did not. Strategies. I don't even know what we should do for our risk targets and everything in oil. But let's change the time to 9 o'clock. I mix it to 60. Should we put it on Sim 101? Maybe we should make a different account for it, but for now I won't. Click OK and just see if the what the thing pops out as for this. Oh man, there it goes. Wowzer. Shine Bomb, I expect an agreement on water treaty in the coming days. I don't think that's why it's moving. What a disaster so far, man. Well, I guess they held on to that short. I think it's still got a ways to go till it gets target, right? Sorry, it was 21. So it should be at like 15. So it's like 2 ticks short. Oh, I added it on, but I didn't turn it on. This might not work very well in oil. Oh, I don't know. It says that it would have taken a short there. Eek. Oh, okay, yeah, that's not gonna work. I have to change this. I think that the strategy needs to have calculate set to on each tick. Almost there. I hate it when it plays this game with me where it's like, oh, it should be 1 tick, but it should be easy, but it's not. Or right there, is that, why is that a short? Is that an exit? That doesn't make much sense to me. Shouldn't it be, it should only be a short if it's like, I don't see where it would have taken an entry. That's got to be an exit of some sort. looking at this, I think that it would have taken
Target
it
filled.
somewhere around here. Oh, no, wait, that is 33. How come it says short and not long, though? Wow, they just busted through that 15, man. Okay, so I'm holding, so if I was managing the exit, I think that, you know, I wouldn't have just had my order sitting there at 15, right? So it would have gone through, and me seeing it go through would make me like, I think that we're gonna... Jeez. I also, we should say at this point that there is very clear momentum short, right? Okay, so that right there might have been an exit. Okay, so that would definitely have me out. So in that instance, I would have done a little bit better. I would have done a good 10 ticks better. That's almost double. Wowzer. Quick off topic, I just pulled the 6th bird's nest out of my Suburban. Same bird, same nest style, 6 days in a row. It refuses to stop. It keeps making... Yeah, so what you got to do is you need to get an owl statue. Because the birds are terrified of owls. What should we change the title for this? Bond market starting to collapse? I'm going with that for now. I thought that the overnight action was just kind of meh, but the action that we've seen here this morning is just downright scary. One thing I think we should note about like the whole basis trade blowing up sort of idea is that, like, okay, so the basis trade is blowing up. We saw, let's just say that what we saw on like Monday, Tuesday was indeed basis trades. And then you'd think, okay, well, does that mean it's over? Like they had a huge blow up? Well, there's like so much money in those trades. I don't think that like everybody would have gotten out on those. So if like the whole basis trade is really going to blow up, that's something that I think you could see continue to fall apart for several weeks. Probably the Federal Reserve would step in before that. Okay, so they did make a new low, but I just want to note that it was around 10 where I started to see some like large orders pushing it around and so forth. And when I start to see big orders bullying things around like that, that is often where I like to get out. Because that's, you know, I don't necessarily know what they're doing and I want to play that game. So let's say 10. And it's like right at 10 right now. So we could say we could be taking it off right now. That would have been a legit exit. That would have been almost double what the algorithm actually took. I don't know if running this on oil would be so good, but ZT back in the Pyre stop out. That's interesting. But you know, because the thing is this is a situation where the that model shouldn't be very useful, right? When the market orders are the dominant force, the model loses its effectiveness. It's going to be more effective in a situation where the market maker is in control. Now, it can switch between the two of those very, very quickly, right? Like in this situation, if that was just like a stop out and those guys are done, and you start to get a little bit of mean reversion, and then the market maker is in charge again, and then he's going to let it come all the way back up. Right now in ZN, the buyers or the seller's cost basis is all the way back up at 30. Do we really think that it's going to retrace all the way back to 30? Wow. It just shows you how far it actually has gone. It's actually really turned into a really ugly move, right? Yeah, you're going to have a cost basis and all four treasuries are doing spread trades, right? Well, no, but like, I get what you're saying, I think. You're saying, well, you think that maybe that line doesn't matter because you're only watching it in ZN, and maybe it's that in that situation it matters in ZT, right? But if I'm looking at it on like S&P 500, for instance, it will do that same thing. That when you're in a trend, it just rides that line the whole way. So I haven't found some sort of a way, which is to say, in that situation, that stop out line isn't really predicting anything. It's just moving down coincidentally with the move. And it's moving down with it, retreating to it and bouncing off. Well, that is maybe different. And I guess this other thing that I'm saying about like that it's not going to be as effective in a downtrend like this. I'm getting that more from theory than I am from like my experience with it, you know? Yeah, let's put it on ZT and see. Duplicate in new window. Change it to ZT. Oh, no. Are you talking about this right here? Or does yours look different from mine? Because I thought we were talking about the dotted blue line. But on my ZT chart, it's not anywhere close to the dotted blue line. Get why that says that that's a short. That's not a short. Mine looks different. Maybe, well, that's crazy. Show me yours. Just show me a picture. That's probably, yeah. Oh, you already did. You read my mind. Oh, that's interesting. Oh, you know, that's interesting, actually. So the difference between like it having touched the line and it having not on my chart would just be the difference between the order flow live and not, because that's absolutely a situation where I would expect the tick replay data to not be quite as accurate because there's so much going on, you know. It going like to that stop out line and bouncing hard off of that stop out line does seem significant to me. I thought, yeah, that all happened live. I thought that it was going to be like this, that you would have the stop out line like this, right? That they're like just kind of riding the line the whole way, kind of like how I'll close that. Come back over here to the 10-year treasury. Kind of like what it's doing over here. This is what I commonly see on a trend day, regardless of the asset. And so when it was doing this, and then especially when it started doing this, that to me was like, this is a really broken market, right? I don't look for it to bounce off, you know. In that situation, I use the line as how bad is it, and not necessarily like this is where it's going to come back to in reverse or anything like that. And so to me, this is pretty bad. But on your chart, it did go right to it and bounce on both of the major bounces too, and that does seem significant. And furthermore, I think that it would make perfect sense to me that it would be ZT would be the one that's possibly leading on that. Because like if it's basis trades, wouldn't the volume be more concentrated on the front end of the curve? I don't know. I'm gonna close this. So when I look at volume, ZB is 400,000. ZF is 1,389,000. There's still more volume in ZN. Gosh, I don't know. How would I would like to get some sort of a metric that would tell me, like, I think I know what we need is we would need like the sheep index, right? This thing where it's like we compare the volume today compared to the volume in days past, and then we could see if one treasury was outpacing the others in terms of how far the volume has changed, and then we could sort it out. But it just to me it kind of makes intuitive sense that maybe you would see more activity at the short end of the curve. I really think that one of the biggest problems that I have is that I just don't trust my intuition. You have it looks like that on all four. I definitely do not have it looking like that on all four. I only have the lines on ZF and ZN, and it's like well below them. Maybe you're resetting in a different place. Are you running like your charts on just regular session or something like that? Or are they, my charts are extended sessions, so it should be resetting at the extended session. Okay, that's not, well then why would it be different on all four? And well, and you're not using rhythmic data either, right? And negatory.
Order submitted.
Oh, it's taking along now, huh? Well, this should be interesting. I was like having all sorts of thoughts, and now I just kind of was like, wait, why was I thinking about all that? Oh, you know, I think the thing that I was trying to lead up to was, okay, well, like we can make one video a month. Maybe there's some gear that I need to replace here. But I don't think that like so one of the issues, okay, so there's this complicated issue that we've got, okay? Say we want to run the algorithm on a funded trader combine. So first we would have to pick a different asset or find a funded trader program that allows us to trade the treasuries. But then there might also be issues with the NinjaTrader license itself. In that situation, would I switch over my NinjaTrader to my developer license? Because the license that I have, I don't think would allow me to submit in orders. And I don't know if the funded trader licenses would allow algorithmic execution. So you might kind of get into this situation where I want to upgrade to NinjaTrader 8.1, but like I can't stay on it. You know what I mean? So I'm worried about that. Maybe what I can do then at that point is I can start getting the other data. I forget what it's called. Not the continuum data, but the other kind. Maybe. So, hey Uzi, send me a picture of your ZN. Send me a picture of your ZN. Anyways, but then the other thing that I think I want to do is watch the order flow in the stocks. But the problem with that one is I think that that would really make a lot more sense if I was gonna stick around. Like maybe if I was gonna stream all day until the NYSE close. Because if we're only gonna be around for 30 minutes of the S&P 500 going, I don't think that that one really makes a whole lot of sense, does it? So I kind of want to do that, but I don't know if it makes a lot of sense. So I'm a little frustrated because I feel like that in terms of progress of like what we're gonna do here, that I'm kind of like taking a step back now, right? Oh, okay. What you've got is, I think, pretty similar to mine. Yeah, it is. No, it's different. Why is it different? What's with that? Oh wait, yours is all the way. No, I'm having a hard time. Okay. So do you see here on yours, it kind of hits it and bounces? And on mine, it goes below and this where it comes back up is the ceiling. And this was recorded live on my side. So that's very curious, because one of the things that I've always thought was weird was that we can see pretty significant differences in cumulative delta, but I was never able to detect significant differences in the market order imbalance. Or sorry, in the inventory cost basis. And now we do see that on yours. Oh, you know what? Mine's wrong. I know why mine's wrong, Uzi. Because look, it's not all of the overnight session stuff is screwed up. Am I having that bug again? I had fixed that by like recreating the chart, and then when I did it, it would load but today it didn't work. Okay. Very interesting. So mine is really starting from like the regular session. That's what the difference is. Was not like that yesterday though. Sometimes when I start my NinjaTrader 8, the tick replay data is all fucked. I've noticed clearing the cache fixes that. Or the NinjaTrader cache? Might be time to clear my cache. I probably should do it the proper way though. Right? This is like database management. is this it? Update trading errors. No, that's not it. Historical data, maybe? No market replay ones. When you start looking at historical data, there's so much. Maybe I should just delete the folder. I think there's a fast way to do it, and that's like a proper way to do it, but I don't know. It can't be because, well, let's check my disk real quick. I mean, but it's key for me to know that this was something that I only noticed today. So, like, when I started it up, I immediately saw, hey, it's not loading my tick data on CN. That's messed up. I'm going to leave it alone and see if it does it on Monday. And if it does it on Monday, then I will start to. Did it take the full stop right there? That's sad. I think it didn't do so well today. Oh, no, this isn't too bad. Yeah, it was a long and it hit the stop loss. So there was one trade before this that it didn't get. So it looks like that it was like a loser. No, was it, oh, well, maybe now this time if I do the trade performance for today, it'll look correct. It's the 11th. Yeah, that looks correct. So yeah, it looks like it took 2 short trades and 3 long trades. And the long trades were all bad and the short trades were all good. And I don't think that all of the long trades were. Oh, well, average is 10. So yeah, the 2 of them were like the full stop out and the other one was like only -6 or something like that. If we had started it when we were supposed to, if I had remembered at the beginning of this session, there was another trade. I think it was short. Yeah, there was a trade short that would have worked. I'm gonna close this CL one. I think I gotta do things a different way. So it actually would be just break even today. So that's still not bad. That's still not bad. We could congrats, you can start. I honestly, I really think that if I ran it next week, that there's a good probability that it would pass a funded trader program. I don't know which one I could run it on. So is there a funded trader program that still lets you trade ZN? And are there setup issues with my NinjaTrader and using that, or the 2 issues there? But I do think if I did it next week, that there's a good chance that it would pass. There's a good chance that it would pass. I wouldn't expect it to always work. I think that it's something that's particularly good in this kind of market. Okay. I got sorry, I lost my train of thought. I got a contractor job. So that does mean that I should be able to start taking live trades again. I am not going to take a live trade, I don't think, when the spread in micros is like more than 2 ticks. But I think our opportunities will come. gonna do some of that actual gambling soon. I kind of feel like that I'm just really bothered by retail traders. They only care that, oh, somebody made some money this one time. And they don't realize that it's like a 1 in 3 chance for them to have made money. So like it means nothing. But if that's all they care about, I should be able to go and do a combine, get a payout, and then show it to everybody, and then they think I'm brilliant, right? Like, what are you doing? It's an SRE job. So the thing that I like about this one, I tell you what, man, I had an interview yesterday. Like I got, it all happened very quickly, but I had gotten that offer, and then I had this other interview, and I did not really like this other interview. Because, like, it was for an SRE job, but, like, the questions that they asked me were so divergent from, like, what was on the listing. So this was one that, like, a recruiter had brought to me. And they did all this stuff about, like they were like, okay, we're going to have a meeting beforehand to prepare you for the thing and tell you what to study up on. And would, you know, call us afterwards and all the, like, they're really, really trying hard. Like, they really want this, right? And the questions that they asked were absolutely nothing like the prep. Nothing like the prep. Not even close. And that really irked me. I'm kind of wondering, it kind of seemed to me that it was like, well, this is what we're hiring for, but then they went and they interviewed based on the things that they know really, really well, right? which might not necessarily be relevant to why they're trying to hire somebody for it. But that experience and like a couple of other experiences that I've had through this whole hiring process kind of makes me think that we have a systematic crisis
Order
in
submitted.
hiring practices in the software industry. That like we're not good at hiring. And so I should try and become an expert on interviewing. Like not being interviewed, but giving interviews, doing interviews. And figure out like, okay, what kind of, or is there research on this? What kind of questions are proven to be effective at finding good candidates and things like that? Anyways. What did it do here? Did it just exit? I don't know. No, it went long. Yeah, I gotcha. That's weird that it went long in that situation because... Well, like, what's with this? Okay, so that one is an exit. Okay, that one is the entry. That was my stop out here. It's getting in long again. It's curious that it's getting a signal to go in long here again when the price action is actually quite clearly down. Did you ever think about him? No, I'm not. I also consider a good chunk of the job hiring in the country is done by HR companies in other countries, aren't they? No, I have not seen that actually. So what it seems to, one of the things that seems to be happening is that there was a lot of people in recruitment for a really, really long time. And then when 2022 happened, like companies just let all of the recruitment people go. And so like I've had a lot of experiences where I feel like that the recruiter doesn't seem like they know what they're doing and hasn't been around for very long, but they're not outsourced. In fact, I was surprised at the number of them where when I was talking to the recruiter, it was from a company. Because the other jobs that I had gotten before had been done through like external recruitment agencies. And those have been completely useless. But then the 2 jobs that were brought to me most recently, those were from contracted recruiters, which is the company is contracting that recruiter to go out and find, but they're not part of the company, they're external. That's how that happened. But so that was kind of weird too. Once COVID happened, companies were punished hard for not being in a hiring state, so they're all perpetually posting hiring ads. I've done a lot of jobs where I kind of wonder if they really actually want to hire somebody. Because it's like, I'll interview with them, and I think I was doing a good job, and all of the feedback that I get in the interview is really, really positive. And then I never hear from them again, and the job just gets reposted. I'm like, okay, man, you must not have wanted to fill that position that badly. And especially when you see them that like months later, they're still posted. There's something wrong there, right? So you should be able to fill those jobs in these conditions. So I've seen that a lot. But like the reason why I was kind of getting at this, like I think that maybe we as an industry are just bad at interviewing, is that I've had a couple of instances where I kind of felt like that the person that was interviewing me probably shouldn't be interviewing people. You know, like I had this one where the guy that was interviewing me was just like way too, he seemed ADHD to me. He was like getting super caught up on really trivial details that had nothing to do with like what's this guy's experience and how much they know and things like that, right? This is like him trying to understand somebody else's system and the difference between it. It's like, I mean, why do you want so much detail on this? Doesn't make sense. And he spent way too long. He is somebody that gets tripped up by details, right? So like, if you take that kind of, you know, somebody that's maybe a little bit ADHD, isn't so aware of where their shortcomings are, and they interview, you're really likely to end up with people that have similar shortcomings or other shortcomings that are negatively complementary to it, right? Like it just creates more dysfunction. So like I've kind of, that's where I was kind of like, oh, so what I should actually be doing is like, if I'm gonna be on, because these are like people that would be on the team, right? So, and I remember doing interviews a lot, so now it's like, but if I do interview in the future, I'm gonna really know. Another thing that really bothered me is that I've had so many interviews where I really don't feel like that the interviewers came prepared at all. They didn't know what questions that they were going to ask. They were just winging it on the questions that they did ask. And so I had these situations where they're like, well, okay, so we're going to try and ask you this super technical problem solving question, but we haven't really considered this problem ourselves. And the candidate gives us all of these solutions to it that we didn't expect and that we're not prepared to deal with. So now the person is like trying to figure out their solution on the fly. And I was just like, and there were also situations where it was like, okay, if you were interviewing, you wouldn't be passing your own interview. Like, had that happen too. So I think that by and large, my experience has been pretty typical. Like, it took me as long to get a job as like all of the estimates were saying. And I'd probably had mostly to do with that a lot of the jobs that I was considered for just really weren't a good fit. They were not, what they really cared about was not actually the things that I was good at. So, you know, there was that too. But then I go back and it's like, but yeah, but everybody's having problems, right? And I think that maybe part of it is software just sucks at interviewing. We gotta get better at interviewing. Maybe I'm wrong. Now, there's also this other issue that's like ghost jobs and ghost candidates. And the problem there is you have to submit to so many jobs now, and that's stupid. But I don't think that will last forever. I'm sure that the industry will find ways to fix that one. Okay, well, it's time for me to get going. You guys think about which, what things you care about the most, like videos that we would make and projects that we would take on. We're gonna have less time, but probably more freedom in terms of being able to take risk. So let's kind of adjust and decide, see what kind of content we can come up with. And for now, like, my top one is probably like influencer red flags. But if there's a video you'd like to hear about, you let me know about it on Monday. And or some of these thoughts about like doing order flow on stocks or running one of these algorithms live. Anyways, I'm going to get going. Make sure the boys wake up at a good time, because yesterday they did not wake up late and they did not want to go to bed on time. So I will see you on Monday. Stay excellent, team.